they're banking, literally, they are banking on the fact that most people don't realize how the interest is calculated. They don't realize that the due date for your payment is pushed towards the end of the cycle rather than the beginning of the cycle, so they can have a higher average daily balance. It's all deliberate, I assure you. Hi. Today I thought I would give you a little hack to save some money on a credit card balance that you might be carrying. I know a lot of people are carrying a credit card balance. And this doesn't involve paying any extra towards a minimum payment, although paying extra beyond the minimum payment is a good idea. There is a hack where you don't have to pay extra beyond the minimum payment, but you can still save a few bucks. So I think this would be best illustrated if I give an example. So in this example, I'm assuming a $5,000 balance that is being carried on a credit card. The minimum payment is $150, and it's due on the 8th of the month. And the interest is 30% APR, which in my opinion is absolutely criminal. That's totally outrageous, but unfortunately credit cards are at that point. It's just insane. But anyways, that's my assumption here. 30% APR. And the statement closing date is the 14th. And then just to simplify the calculations a little, I'm assuming a 30-day month and a 365-day year. Now, if you're like most people, you probably pay on the due date. So in this first version of my little example here, okay, you pay $150 on the due date. So let's think about what's happening there. First of all, you have to understand that when the credit card company calculates the interest that they charge on the credit card, it's based on the average daily balance. So we have to calculate what the average daily balance would be. So the statement closing date is on the 14th. That means the beginning of the cycle is on the 15th. So at the beginning of the cycle, the balance is $5,000, and it stays at $5,000 until the 8th. The 8th is your due date. So you say, okay, I'm going to pay $150. That's my minimum payment. So then on the 8th, the balance drops from $5,000 to $4,850, and then it stays at $4,850 for the rest of the cycle. We're also assuming that you're being smart about things and you've retired that credit card, so you're not using it and you're not making additional purchases. Okay, you're trying to get it out of your hair, so you're not touching it. You're just making payments and trying to get it taken care of. So you pay $150 on the 8th, and then the rest of that statement cycle, the balance is $4,850. So what's the average daily balance then? Well, you had 7 days where the balance was at $4,850. You had the 8th, the 9th, the 10th, the 11th, the 12th, the 13th, and the 14th. 7 days. And then you had all the rest of the time at the beginning, the statement balance was at $5,000. So that's 23 days at $5,000. So that means that your average daily balance, which is the key number here that they're basing the interest on, the average daily balance was $4,965. That's the number that they take when they calculate the interest that they're going to charge you. How do they calculate the interest? Remember I said we're using 30% APR. So to calculate the interest, you take the 0.3, which is the 30%, and it's APR. So you divide that by the number of days in the year, 365, and then we're assuming a 30-day month, so you're multiplying that by 30. And then that's the value that you multiply your average daily balance by to get the interest. So you take the $4,965 multiplied by 0.3, divide by 360, and then multiply by 30. And you get an interest of $122.42. And so then that gets tacked onto the $48.50, and then that's your new balance. Okay, so remember that. Remember that number. The interest with this scenario, this first scenario of paying on the due date, the interest is $122 and change. Now, how about paying on the first day of the statement cycle rather than on the due date? Same, everything else is the same. Same minimum payment, same starting balance, $5,000 on the 14th. But then on the 15th, now you pay that minimum payment, $150. So then the balance drops to $4,850. And so now you've got 30 days of that balance being $4,850. And now that's the number that they use to calculate the interest. Interest is calculated the same way. The average daily balance now has gone from, instead of being $4,965, now the average daily balance is $4,850. So you take that times the 0.3 divided by 365 and then multiply by 30, and guess what the interest is now? The interest now is $119.60. So you've saved a few bucks just by switching, instead of paying on their due date, which I assure you, they purposely put the due date towards the end of the cycle to get that higher average daily balance. That's one of the tricks that they play. You've got to be aware of this. So we're not outsmarting them, but they're banking, literally. They are banking on the fact that most people don't realize how the interest is calculated. They don't realize that the due date for your payment is pushed towards the end of the cycle rather than the beginning of the cycle, so they can have a higher average daily balance. It's all deliberate, I assure you. So you play the game, you're playing their game, but you're playing it a little smarter. And instead of paying on the due date, you pay on the first day of the cycle, or as close to the beginning of the cycle as you can. Now, you might say, well, what's the big deal? $3, who cares? I'll tell you why it makes a big deal. Yeah, it's only $3. That's for one individual. But it's $3 that's in your pocket, not in the pocket of the credit card crooks, right? That's one thing. That's one way to look at it. Why give them $3? They don't need your $3. Hang on to everything that is yours. So that's one way to think about it. Another thing to think about it is, what if more people started doing that? What if more people said, I'm going to pay on the first day of the cycle rather than on the due date? So in other words, let's consider this. Suppose there were 10,000 people with this exact same scenario, $5,000 credit card balance and 30% APR and $150 minimum payment, and they all paid at the beginning of the cycle rather than the end. So each one of those 10,000 people saved $3. On an individual basis, it doesn't seem like much, but guess what? What would happen with the credit card company? All of a sudden, if 10,000 people did that, that means that there's $30,000 that is not going to the credit card company. So let that sink in. Think about that. Do you really want those crooks at the credit card company to get $30,000 just because everybody's lazy? I don't. So that's something to think about. So yeah, you can save yourself a few bucks, still paying the minimum payment. Of course, like I said, if you pay above the minimum payment, that's even better. But just the absolute essentials, paying the minimum payment. But just shifting the timing, that can make a big difference in the long run. There's some other advantages to this as well. For example, if you wait until the due date, you're more likely to maybe forget about it, or you might say, oh my gosh, I don't have enough money in my bank to cover that, or whatever, this month is kind of tight, that type of stuff. Well, if you pay at the beginning of the cycle, you can be a little more flexible. Okay, it's today's the first day of the statement cycle, but payday's tomorrow, so I'm going to wait till tomorrow. You got the flexibility. If you are paying on the due date and things are tight and your payday's in a day or two, guess what? The credit card company doesn't care. They'll slap you with that late fee. So you pay at the beginning of the cycle, it's less stressful, you have a bit more flexibility, you never have to worry about late fees. All those things, let's think of it this way. The system is set up in the favor of the credit card companies. That's why they have all the crap about late fees and outrageous, criminal, in my opinion, it is criminal APR that they're charging. It's unbelievable. And the whole thing about when the timing of the due date, that is all deliberate. They've rigged the system in their favor, so you can fight back. You can pay extra, but you can also do something as simple as shifting your payment to the beginning of the cycle. So I hope this has been informative for you. I hope it gives you something to think about. I'm willing to bet that not many people realize that they're basically leaving money on the table in this manner just by paying on the due date. They got you conditioned to think that, just because it's on the due date, it doesn't, you can wait until that. Well, you can, but you're not doing yourself any favors. Anyways, I hope you found this helpful. I hope you found it informative. So if so, please give this video a thumbs up and subscribe and share it with a friend. Maybe you know a friend who's struggling with credit card debt. I think most people are, especially with the crazy inflation, right? People are putting groceries and basic essentials on credit cards because they have no choice. Anyways, that's another story. But yeah, share with a friend. Maybe it will help them. What else? Oh yeah. Have you heard of this hack before? Have you tried this hack? Or what do you do to combat or to fight against the credit card companies? What kind of hacks or tricks do you use? So put it in the comments below and let's get a discussion going. So that's it for now. I hope you like it. And I'll talk to you later. Bye.